Hey everyone, ready to take a deep dive into something that's probably been hitting your wallet lately?
I'm thinking what you're thinking. Inflation.
Bingo. I mean, remember those good old days when $100 felt like, well, a full $100?
Yeah, sadly those days seem long gone.
These days it's more like, what, like $94? Something like that?
Ouch. Yeah, you're not wrong about that. That $100 from last year only buys you about 6% less today, all thanks to inflation.
Ugh, it's a real drain on everyone's purchasing power, that's for sure.
It is. It is. And it's everything, right? Like that morning coffee, those weekly groceries, filling up your gas tank. It all just keeps adding up.
Okay, so we're feeling it, that's for sure. But on this deep dive, we're going to unpack why this is happening. Like, what's the real story behind all these rising prices? And more importantly, how do we protect ourselves from it?
You got it. That's our mission today.
All right, so first off, I think a lot of folks out there are wondering, like, how bad is this inflation situation really? Are we talking about like a temporary blip, or is this something more long-term that we need to brace ourselves for?
Well, I think the numbers paint a pretty clear picture. Here in the U.S., we're projected to end 2024 with inflation around 2.6%.
Okay, so that's not as bad as the crazy roller coaster we saw back in 2022.
No, you're right. It's not nearly as bad as 2022, but it's still higher than what we were used to pre-pandemic. And then globally, the IMF is predicting about 5.8% for this year.
So it's definitely a global issue.
Oh, absolutely. It's affecting everyone.
But I guess different economies are experiencing it in different ways.
Yeah, and that's where things get interesting. See, the EU, for example, they're actually seeing a drop in their inflation, down to about 1.7% as of September, actually.
Really?
Yeah, they've benefited from falling energy prices, and their core inflation has been pretty stable.
So things are looking up over in Europe.
For now, yes. But then, on the other hand, you have economies like Venezuela and Zimbabwe.
Oh, right.
They're battling extreme inflation, with projections, get this, exceeding 190%.
Oh, that's a completely different ballgame. Okay, so it's not a one-size-fits-all situation.
No, definitely not. Not at all.
Okay, but I think what a lot of people are wondering is like, what are the main culprits behind these price hikes in the first place? What's actually fueling this?
Well, it's like a tangled web, really. There's not just one thing. But a major one is definitely those lingering supply chain disruptions that everyone's been talking about.
Right, those are still happening.
They are. They're still happening. Think back to the pandemic, those Red Sea shipping route issues, the ongoing geopolitical tensions.
It's a mess out there.
It is a mess out there. It's all created these bottlenecks in the system, which drives up costs. Like, for example, European manufacturers, they've been hit hard by those Red Sea disruptions, and it pushed their prices higher.
Right, it's like one disruption ripples out and affects everything else.
Exactly. It's like a domino effect. And then on top of that, you've got the energy roller coaster.
Oh yeah, energy prices are definitely a factor.
Big time. Remember how much those soaring energy costs impacted European inflation back in 2022?
Yeah, that was rough.
It was. Especially for countries that rely heavily on energy imports, they really felt the pain.
Okay, so supply chains and energy prices are big players.
For sure.
But what else is fueling this inflation fire? What else is going on?
Well, housing costs,
Hmm.
and especially rent, those have been a major culprit.
Rent is just out of control these days.
It really is. It all comes back to supply and demand. You've got high demand, but very limited housing supply, and that just means prices go up.
Makes sense. It's basic economics.
Yeah, simple supply and demand. And when a big chunk of people's budgets goes to housing, it really pushes overall inflation higher. It's like a ripple effect.
Ugh, tell me about it. Finding an affordable place to live these days feels like searching for a unicorn.
It's tough out there, no doubt about it. And then you've got another interesting dynamic, the tight labor market and rising wages.
Okay, so more people are working, which is good,
It is good. It's good for workers.
but it also means wages are going up.
Exactly. Which puts upward pressure on prices as businesses try to cover those increased labor costs.
So even though we're getting raises, those gains are being eaten up by higher prices on everything.
It can feel that way, yeah. You're running on a treadmill but getting nowhere.
That's a great way to put it.
And you know what's interesting? Surveys have shown that a lot of consumers actually see those wage increases as the main driver of inflation.
Really?
Yeah, even more so than things like rising costs of materials for businesses.
That makes sense, actually.
Right. Like you get that paycheck increase, it feels like you've got more money, but you might not be paying as much attention to how much more you're spending on everything else.
Yeah, it's easy to overlook those subtle price increases when you feel like you have more money coming in.
Exactly. But it's not just about wages. Think about all those rising input costs for businesses, everything from raw materials to transportation costs.
Right, it all adds up.
It does. It all adds up. And those costs get passed on to us, the consumers, in the form of higher prices. And then, of course, you've got the role of central banks in all of this.
Oh, right. They try to control things with interest rates.
Exactly. They raise interest rates to try and cool things down.
But that affects how much people can spend and borrow.
Right. It has its own ripple effect on prices. So as you can see, it's this really complex interplay of factors all feeding into this inflation beast.
Okay, it's definitely a complex picture.
It is.
But let's get down to brass tacks here. What's
Yeah.
the latest data telling us about where things stand right now? What are we looking at?
Okay, well, hot off the press, the November 2024 CPI data paints an interesting picture.
Okay, what's it saying?
Well, in the U.S., the annual inflation rate inched up slightly to 2.7%,
Okay.
compared to 2.6% the month before. And looking at it month over month, we saw a 0.3% rise.
So even though things have been relatively stable,
Hmm.
we're still seeing those price creeps.
Yeah, unfortunately. And it's mostly driven by those pesky increases in shelter, food, and energy costs.
Of course.
Always those. What about the UK? Are they experiencing similar trends?
Yeah, what's going on over there?
Very similar, actually. Their annual inflation rate also rose to 2.6% in November, up from 2.3% in October. And again, housing is a big factor there. Their CPIH, which includes owner-occupied housing costs, actually jumped up to 3.5%.
Ouch. So globally, it seems like we're stuck in this holding pattern. Inflation is moderating, but it's not going away anytime soon.
It looks that way.
So what does this mean for us regular folks who are just trying to, make ends meet and plan for the future?
It means we need to be savvy and adapt and really find ways to protect ourselves.
Okay, and that's what we're going to dive into next.
We are. We're going to explore some strategies to help you keep more of your hard-earned money. But first, let's look at how people are actually reacting to these rising prices.
Yeah, because ignoring it won't make it magically disappear.
Right. It's not going anywhere.
So what are the trends in consumer spending looking like? Are people tightening their belts, or are they just kind of like throwing caution to the wind?
It's actually a really fascinating mix.
Okay, tell me more.
Well, one thing is clear. People are being more price sensitive. You're probably feeling it yourself, right?
Oh,
Prioritizing those essential goods. Hunting for bargains.
I'm definitely doing a lot more comparison shopping these days.
Yeah, me too. It's the new norm. There's definitely a shift towards needs over wants.
Makes sense. When your budget feels squeezed, you have to make some tough choices.
Exactly. But, you mentioned a fascinating mix.
Right.
And here's the interesting part. Despite all the economic concerns, there's also this counter trend of people actually wanting to splurge.
Really? That's kind of surprising. Why would people splurge when everything's so expensive?
Yeah, it seems to be a mix of people wanting to reward themselves after a tough few years.
Right.
And then there's also this might as well enjoy it now mentality
Boy, yeah.
because, prices are only going up, so why not?
Right. Live for today.
Exactly. But I imagine there's a big difference between how those who are financially comfortable are reacting to this compared to those who are really struggling.
Oh, for sure.
Yeah, so high-income consumers, they're more likely to splurge on things like travel, dining out.
Right. The fun stuff.
Yeah, the fun stuff. Whereas those with lower incomes are really having to stick to just essentials and often trading down to cheaper alternatives.
Right. Just to make ends meet.
Exactly. So there's a real disparity in how people are experiencing and reacting to inflation based on their income level.
Yeah, that makes sense. Okay, so we've looked at the drivers of inflation, the latest data, and how consumers are reacting. But what about the big brains in economics? What are central bank leaders and economists saying about all of this?
Oh, that's where things get really interesting.
Okay, I'm intrigued. Lay it on me.
Because there are some really contrasting viewpoints out there. So first, let's start with the European Central Bank. Christine Lagarde, the ECB president, she's actually quite optimistic.
Oh,
She believes inflation in Europe will be back to their target of 2% by mid-2025.
so the ECB's feeling pretty good about things over there.
They are. They've even pointed out that all this progress has happened without major job losses, which is great.
That's a good sign.
It is. But then on the other side of the Atlantic, we have Jerome Powell, the Fed chair here in the U.S., and he's singing a slightly different tune.
Oh, how so?
He's more cautious. He acknowledges that there are signs of easing inflation, but emphasizes that it's still stubbornly high.
So he's not ready to celebrate just yet.
Not quite. The Fed is taking a wait-and-see approach.
Okay, so a more measured approach.
Right. They want to manage those inflation expectations before making any big moves. And then you have central banks like Turkey.
Right.
They're taking a completely different route. They've actually been cutting interest rates to try and stimulate growth and get a handle on inflation.
Wow, that seems counterintuitive, cutting rates when inflation is high.
It does, right.
Hmm.
But President Erdogan is projecting a decline to around 26.5% by the end of 2025.
Wow, okay, so they're going all in on that strategy.
They are. And then you have the Central Bank of Brazil.
Okay, what are they up to?
They're kind of stuck between a rock and a hard place. They recently raised interest rates to try and tackle their persistent inflation. But they also know they need to keep their economy growing.
So it's a delicate balancing act.
It really is. It's a tough job.
Yeah, it sounds like central banks around the world are walking a tightrope, trying to tame inflation without causing a recession.
That's a great way to put it. And then, of course, on top of that, you've got all the economists weighing in with their predictions and analyses.
Oh, right. The expert opinions.
Yeah, they add another layer to the whole mix.
Okay, so what are the experts saying? Give us the rundown.
Well, one prominent voice, Bruce Kasman, the chief economist at JP Morgan, he's predicting global core inflation to stick around 3% in 2024.
Okay.
He's particularly concerned about persistent inflation in the services sector.
Because of those tight labor markets we talked about earlier.
Exactly. He believes we might need to see a noticeable cooling in labor markets before we see a real decline in that core services inflation.
Interesting. So not everyone is as rosy as the ECB.
Definitely not. And then you have Morningstar taking a slightly more optimistic view. They're projecting inflation to average around 2.4% in 2024 and then steadily decline to 1.8% between 2025 and 2028.
Okay, so they see a more gradual and consistent decline. What's their reasoning behind that?
They're banking on improvements in the supply chain and a slower pace of GDP growth to help cool down those prices. They're also pointing to the resilience of the U.S. economy as a good sign.
So despite all the challenges, they see the economy as strong enough to weather the storm.
That's their bet. And the White House Council of Economic Advisors, they're on a similar page. They're reporting a yearly inflation rate of 2.5%, which is actually right in line with their earlier predictions.
So far, so good, I guess.
Right. And they even highlight that we've reached this point without major economic pain or big jumps in unemployment.
So maybe that soft landing everyone's been hoping for is actually possible.
Fingers crossed. And lastly, we can't forget the IMF. They're projecting global inflation to fall to 5.9% in 2024, with a gradual decline expected as price pressures ease.
Okay, so the IMF is cautiously optimistic.
Yeah, I'd say so. But they do point out that persistently high services inflation is still a big hurdle.
Right, we talked about that.
And they're also waving a big caution flag about those geopolitical tensions.
Yeah, those are always a wild card.
Right, because they can really impact energy prices and global trade and kind of throw a wrench in everything.
Right, those are those unpredictable factors that can really derail any prediction.
Absolutely. The IMF also makes a good point about the divergence in inflation trajectories between advanced and emerging economies. While advanced nations are expected to get closer to that 2% target by 2026, emerging economies, they're projected to have higher rates, hovering around 4.9%.
So it's a complex picture for sure.
Very complex. It's not just about one number or one prediction.
Right, it's about understanding all those moving parts.
Exactly. The different perspectives, the potential risks and opportunities that are ahead.
Okay, well that brings us to probably the most crucial question.
I think so.
Enough doom and gloom. Let's talk solutions. What can we actually do to protect ourselves in this inflationary environment? What are the experts recommending?
Well, financial advisors are actually recommending some very practical and effective strategies.
Okay, let's hear it. Give us the game plan. How do we stop inflation from eating away at our hard-earned money?
Well, one of the most fundamental strategies is diversification across asset classes.
Okay, so not putting all your eggs in one basket.
Exactly.
So stocks, bonds, real estate, that kind of thing.
Exactly. And commodities, too. Think of it like this. Some investments do really well during times of inflation and some not so much. But when you diversify, you're less vulnerable to the ups and downs of any single asset.
Right, it spreads out the risk.
Exactly.
Okay, so spreading that risk makes sense. What else?
Well, real estate is often seen as a good inflation hedge,
Okay,
since property values and rental income tend to rise as prices increase.
but isn't buying property a little out of reach for a lot of people?
Yeah, it can be, but you can invest in real estate directly or indirectly through REITs, which are like mutual funds for real estate.
Right. REITs?
Yeah. REITs let you tap into a diversified real estate portfolio without having to manage properties yourself, so it makes it a lot more accessible.
Okay, so that's a good option. So diversification and real estate are two key strategies.
They are.
Got it.
Mhm.
What else can we do to protect ourselves?
Well, another important strategy is looking into what are called inflation-protected securities.
Yeah.
These are investments that are specifically designed to help you maintain your purchasing power during times of inflation.
Okay, can you give me some examples of those? What are some specific inflation-protected securities that we should be looking into?
Yeah, one of the most popular ones is called TIP, Treasury Inflation Protected Securities.
Okay.
These are government-issued bonds that adjust their principal value based on changes in the Consumer Price Index, or CPI.
So as inflation rises, the principal value of these bonds goes up too.
Exactly.
Oh,
Which means both your principal and the interest payments you receive increase along with inflation, so it really helps you stay ahead of those rising prices.
that sounds like a pretty solid strategy.
It is. It's a very popular option. And there are also other inflation-indexed bonds out there. Like, for example, in the U.S., there are Series I savings bonds, which offer a similar kind of protection against inflation.
Okay, so TPS and Series I savings bonds, those are good options to look into.
They are. And then there's also the world of commodities and precious metal.
Ah, yes, the classic safe haven of gold.
Right. Those are often viewed as a safe haven during inflation.
Okay.
So these are things like gold and silver and oil and agricultural products, tangible assets.
Right, right. Okay, so why do commodities tend to perform well during inflation? Why is that?
Well, their prices typically rise when the cost of producing and transporting things goes up. So
Okay.
if it costs more to make and move goods, then those higher costs get passed along, and that's reflected in the price of those commodities.
Okay, that makes sense. So diversifying into commodities can be a smart move, especially if you're worried about, your money losing its value.
Yes, absolutely. Especially if you're an investor looking for assets that really hold their value during those times of economic uncertainty.
Yeah, that makes sense.
They can provide a sense of stability when things feel shaky.
Got it. Okay, so far we've got diversification, real estate, inflation-protected securities, and commodities.
Yep, that's a good start.
But what else? Is there anything else we should be thinking about?
Well, don't forget about good old-fashioned dividend-paying stocks.
Oh, right, dividends. Okay, so remind me, how do those work?
So these are stocks that pay out a portion of their profits to shareholders regularly.
Okay.
So even if the stock price fluctuates,
Hmm.
you're still getting some income from those dividend payments.
Right, so it's like a little bonus on top.
Exactly. And a lot of these dividend-paying companies, they're in sectors that tend to do well even when there's inflation, like consumer staples.
Right, because people still need those everyday essentials no matter what the economy's doing.
Exactly. Those companies can usually pass on those higher costs to consumers without a big drop in demand.
So dividend-paying stocks, especially in those essential sectors, can provide a nice cushion against inflation.
They can. Another tip is to look into shorter duration bonds.
Okay, shorter duration bonds. And why is that a good thing during inflation?
Well, they're less sensitive to those interest rate hikes that central banks use to combat inflation. See, when rates go up, bond prices usually go down, but those shorter duration bonds, they don't move as much.
So they're a little bit more stable when things are volatile.
Exactly. And then finally, don't underestimate the power of high-yield savings accounts and CDs.
Right.
They might not have the highest returns, but they can help you preserve your purchasing power, especially when interest rates are on the rise.
Right. It's all about having that balanced approach and finding the strategies that work best for your specific situation, right?
You got it. It's
Yeah.
not one size fits all.
Okay, I feel like I'm starting to get a handle on all of this. But where does someone even begin if they want to start, putting these strategies into action and actually protecting themselves?
Well, the first step is always to assess your current financial situation and your goals.
Okay, so figure out where you stand.
Exactly. What's your risk tolerance? What's your investment timeline? What are you actually hoping to achieve with your money?
Right. Those are good questions to ask yourself.
Yeah. And once you have a clear understanding of those things, then you can start to see which strategies fit best with your overall plan.
Right. Because a one-size-fits-all approach really isn't going to cut it.
Exactly. Everyone's financial situation is so unique.
It is.
It's really crucial to personalize that strategy. Like, for example, somebody who's nearing retirement is going to have very different investment goals and needs compared to somebody who's just starting out their career.
Right. That makes total sense.
And that's where seeking guidance from a qualified financial advisor can be incredibly helpful.
Yeah, like having a personal guide through the financial jungle.
Exactly. They can help you develop a personalized plan that takes everything into account. Your goals, your risk tolerance, your time horizon.
Yeah, it takes the guesswork out of it.
It does. And they can help you avoid those common mistakes that people often make when they're trying to protect themselves from inflation.
Okay, so what are some of those mistakes that we should be watching out for?
One of the biggest ones is trying to time the market.
Okay.
People might hear about rising inflation and they suddenly want to make all these drastic changes to their portfolio, thinking they can buy low and sell high.
Yeah, it's tempting.
It is tempting. It feels like everyone wants to be a stock market guru these days.
Right.
But the reality is it's extremely difficult to predict market movements.
Yeah, that's the tricky part.
It is. And trying to time it often backfires, and people end up losing more money than they gain.
So resist the urge to make those impulsive decisions.
Yes, absolutely.
Okay, so patience and discipline are key.
They are. Another big mistake is putting all your eggs in one basket, even if it seems like a surefire inflation hedge.
So even if I'm totally convinced that gold is about to skyrocket, I shouldn't put all my money in gold.
Exactly. Diversification is key, remember?
Right, right.
Even assets that usually do well during inflation, they can experience volatility, so it's really important to spread that risk around.
Don't put all your eggs in one basket.
Exactly. And then finally, a mistake that people often overlook is not paying attention to fees.
Oh, right, the fees.
Those fees can really eat into your returns, especially when you're investing for the long haul.
Yeah, those little fees add up.
They do. They really do. So make sure you understand the fees associated with any investment before you dive in.
Yeah, that's a good point.
Compare different options, ask questions, make sure you're getting the best value for your money.
It's all about being smart and strategic.
It is.
Okay, so those are some good mistakes to avoid. But what are some things that people can start doing right now? Like concrete actions they can take to start protecting themselves?
Well, one of the simplest things you can do is just review your budget. See where you can cut back on any unnecessary spending.
So those little leaks in your budget.
Exactly. It's all about making those small adjustments that add up over time.
Yeah, it all makes a difference.
It does. And once you've freed up some cash, think about boosting your income.
Okay.
Could you ask for a raise? Could you pick up a side hustle? Could you monetize a skill you have?
So reduce expenses, increase income. A two-pronged approach.
You got it. The more financial breathing room you have, the better positioned you'll be to handle anything that comes your way, including inflation. And then you can start to explore those specific investment strategies that we talked about earlier.
Okay, so let's go back to those strategies for a minute. Can you give us a quick recap and maybe some tips on where to get started with some of them?
Yeah, absolutely. So for a low-risk starting point, consider increasing your retirement account contributions,
Okay.
especially if your employer matches those contributions.
Right, that's free money.
It is. That's a great place to start, especially for long-term growth. And if you're comfortable with a bit more risk, then you can look into a diversified portfolio of stocks.
Okay.
For those inflation-protected securities we talked about, you can actually buy tips directly from the U.S. Treasury or through a brokerage account. And Series I savings bonds can be purchased online through Treasury Direct. It's a pretty straightforward process.
Okay, so access to those is pretty easy.
It is.
What about real estate? I feel like that can be a little intimidating for people.
It can be, but remember those REITs that we talked about?
Right.
Those are a great way to dip your toes into the real estate market without having to buy property yourself.
Right. A little bit more manageable.
Exactly. And if you're interested in commodities, there are also ways to invest in those as well, like through mutual funds or exchange-traded funds that track commodity indexes.
So there are options for everyone, even beginners.
Yes, absolutely. And that's where, again, that financial advisor can come in really handy. They can help you make sense of all these options, understand your risk tolerance, and create a plan that really aligns with what you want to accomplish.
Right. That personalized roadmap to help you stay on track.
Exactly. And remember, it's an ongoing process. You don't need to have all the answers right away.
Right.
Just start with small steps. Do your research, adjust your strategy as needed.
It's a marathon, not a sprint.
Exactly. The important thing is to be proactive and take control of your financial future.
It's empowering to know that we have options and that we can take action to protect ourselves from inflation.
It is.
It's not about becoming a financial wizard overnight.
Right.
It's about being informed and seeking guidance and just making those consistent efforts that will pay off over time.
Exactly.
Well said.
Okay, so we've talked a lot about protecting our wealth from inflation.
We have.
But what about the people who are already struggling to make ends meet? They're the ones who are hit the hardest by this, right? Yeah, absolutely. Inflation doesn't affect everyone equally.
Right.
When those prices for essentials like food and energy, when those skyrocket,
Yeah.
it puts a huge strain on those who are already living on really tight budgets.
So what advice do you have for people who are in that situation, who are really feeling the pinch?
Well, I think in those situations, it's even more critical to focus on the basics.
Okay.
Prioritize your spending on those absolute essentials, cut back wherever you can, and look for any resources and support programs that can help you.
Right, because every dollar counts when you're on a tight budget.
Exactly. It might feel impossible to even think about investing when you're just trying to get by.
Right.
But even small contributions to a savings account, that can help you build a safety net over time.
It's about building that cushion, even if it's just a few dollars at a time.
Exactly. And remember, there are organizations and resources out there that are specifically designed to help. Don't be afraid to reach out and get the support that you need.
That's a really important reminder. There's no shame in asking for help, especially when you're going through a difficult time.
Absolutely not. And on a broader level, tackling inflation really requires more than just individual actions.
Right, there's a systemic component to this as well.
Exactly.
It's not just about personal responsibility.
Right. We also need policies and economic measures that create a more stable and equitable system.
A system that works for everyone, not just those at the top.
Well said. We need to address those root causes of inflation, like those supply chain issues and rising energy costs, and find solutions that actually benefit everyone.
Yeah, it's about creating an economy that works for everyone, not just the privileged few.
Absolutely.
This deep dive has been incredibly insightful,
It has.
really eye-opening.
Yeah.
I think the biggest takeaway for me is that while inflation is a real challenge, it's not something that we should feel powerless against.
I agree.
There are steps we can take, and we have the resources to help us. So we'll be back in part 3. Welcome back to part 3, everyone. We've talked about a lot when it comes to inflation, from understanding those pesky price hikes to figuring out how to protect your money.
We have.
But before we wrap up this deep dive, I want to make sure that our listeners have some resources so they can keep learning more about all this stuff and really become inflation-fighting experts.
Yes, staying informed is key, especially in the world of finance, where things change all the time.
So where should people go to find, reliable information about inflation and investing? What are some of your go-to sources?
Well, I think reputable financial websites and publications are always a great place to start.
Okay.
Places like Investopedia, The Balance, NerdWallet.
Oh, yeah. I love those sites.
Yeah, they're great. They offer a ton of information on all kinds of financial topics, including inflation.
And they explain it in a way that normal people can understand.
Right. You don't have to be like a financial whiz.
Exactly.
Mm.
Okay, so those are good starting points. But what about if people want to take a deeper dive?
Yeah, if you're looking for more in-depth analysis and research, then you can check out resources from organizations like the International Monetary Fund,
Oh, right, the IMF.
the Federal Reserve, the European Central Bank.
Okay, so those are for the real serious deep dives.
Those are the big guns. They give you those big picture perspectives and global economic insights.
Okay, so those are some good ones. What about like a more casual approach? Like how do you stay up to date on this stuff in a way that's not, super intense?
Well, don't forget about books. There are tons of great books out there written by financial experts, and they can give you valuable insights and strategies for dealing with inflation.
Right, books are a good one. What about on-the-go learning?
Well, I have to recommend financial podcasts.
Of course.
Yeah, right.
The best way to learn.
They are, I think, a really great way to stay up to date on all things finance
Yeah.
and hear from different experts and really kind of get different perspectives.
Okay, so we've got websites, publications, organizations, books, podcasts. Are there any other, tools or calculators out there that might be helpful? Anything that can make, these abstract numbers and concepts feel a bit more real and tangible?
Yes, absolutely. There are some great inflation calculators available online.
Oh, yeah.
And they can really help you see how inflation actually impacts your purchasing power over time. Like, remember how we talked about that $100 from last year being worth only $94 today?
Right.
Well, these calculators can actually show you how that plays out over longer periods, like 5 years, 10 years.
Yeah, that's a good way to visualize the impact.
It is. It can be very eye-opening.
Okay, so we've got a whole toolkit full of resources to help us fight inflation. But I think even with all this information, there's still a lot of uncertainty about the future, right? Like, what's the outlook for inflation? Are we headed for a recession? Should we be hitting the panic button?
Well, I wish I had a crystal ball.
Right.
Right. But unfortunately, economic predictions, they can vary, and there are always unexpected events that can happen.
Always something.
Right. But it's important to remember that economic cycles, these upswings and downturns, they're normal.
Right, they have
They've been happening throughout history.
part of the ride.
Exactly. And while we can't control those big economic forces, what we can control is how we prepare for them.
Right. Be prepared.
So it's about being informed, it's about being adaptable and having a plan in place,
Yeah, not panicking.
right? Staying calm
Yeah.
and not letting fear drive your decisions, because that rarely leads to good outcomes, especially when it comes to money.
Yeah, clear heads make for better choices.
Absolutely. Couldn't agree more.
Well, this has been incredibly eye-opening, I think, for both of us and hopefully for our listeners as well.
It has.
We've really explored a complex landscape here. But I think the key takeaway is that inflation is a concern, obviously,
It is.
but it's not something that we should just let paralyze us.
Right.
There are things we can do to protect ourselves, and we have resources to help guide us along the way.
Exactly. By understanding inflation and how it works, we can make smart choices and face these challenging times with a lot more confidence.
And this is just the beginning of the journey, really.
It is. Keep learning.
Keep exploring.
Keep asking questions.
So thank you for joining us for this deep dive into inflation. We hope you found it informative, helpful, and most importantly, empowering.
We do. We encourage you to continue learning and exploring this important topic. It really is an investment in your future well-being.
Until next time, stay curious, stay informed, and stay ahead of the curve.